Martha, so why was the release of the 2019 budget so important this time around?
The release of the 2019 budget was very important for Mexico this year because we had a very important transition from a right-wing to a left-wing government with the July elections. Andrés Manuel López Obrador, otherwise known as AMLO, swept to victory on a campaign of anti-corruption, anti-business elites. And so we were all watching because he promised large social spend. He promised to eradicate corruption and use the savings from that to invest in social projects and also a series of ill-advised infrastructure projects. So yes, there was a lot more writing on the budget this year than there usually is.
Are investors breathing a sigh of relief? Are they apprehensive still, or how has the market taken it?
Yes, I think investors in the short term are breathing a sigh of relief. There were no nasty surprises in the budget. And if you look on the surface of it, the budget is actually quite worthy. It looks fiscally prudent. He's promising a 1% primary surplus over the next few years. He's promising a fiscal deficit of 2% of GDP and a debt to GDP level stable for now and in fact declining over the longer term. But the devil is in the details in these matters, and if you scratch a little bit below the surface, you come to question some of the assumptions around the budget.
And are there any particular ones that stand out that are perhaps a little more risky in the sense of him not being able to deliver?
Yes, I would say there are 4 yellow flags in my mind that I can see.
Yellow rather than red?
Yes, yellow rather than red. So ones to watch. The first ones are around the macro assumptions. So while the growth assumptions that they're using are reasonable, between 1.5% to 2.5% of GDP growth for next year, when you look at the peso to US dollar, they're assuming that that will remain flat. They're assuming that inflation is going to come down about 1.2, 1.3%. And I think that is a big question mark because we don't know what the global environment is going to be like next year. There could be several headwinds. The second thing to watch would be oil production. Mexico has seen a dramatically declining oil production over the last few years. It's a fifth of government spend, and the new government is assuming that oil production will remain flat, which is highly questionable. Secondly, they're assuming a bit higher oil price than the market is estimating, around $55 per barrel. Now, the good thing is that the Mexican government has a hedging program in place, which basically buys them an insurance, and they can sell their oil at a minimum price for oil prices to fall dramatically.
And they've used this in the past?
They've used this in the past to enormous success. We don't have the details yet for the plan for next year. The finance ministry has said that they will probably continue with this program. So that is something to watch. The third thing I would say is this famous border tax reduction that AMLO promised. So he said he would, in order to incentivize investment along the border with the US, he would reduce VAT for companies and for consumers. And he's estimating in his budget that's going to cost 0.2% of GDP. Some of the market estimates are twice that.
So what's the thinking? Obviously the border is highly controversial, as we know from the American side, but what's his thinking behind that border tax? Is it a particularly poor area, or why does he want to do what he wants to do?
Yes, that's a good question, John. He wants to incentivize investment there precisely because it is so geared to the US economy, and it's such a large part of our economy that he feels that if he can create incentives, companies and probably also American companies will invest more in that sort of manufacturing belt along the border.
Were there any more yellow flags?
There's one more I'd like to point out, and this is an important line item because, again, AMLO campaigned on this very strongly, which is social spend. Most market participants were expecting about 2% of GDP would be destined to social spend, and this includes things like doubling pensions for the elderly, giving student grants, and then also a Mayan train, which is supposed to stimulate tourism into the Yucatan Peninsula. The government is estimating that instead of 2% of GDP, it will be 1% of GDP. So again, I think the market wants it looks to the numbers more closely. How are they getting to this 1% of GDP? So those would be the main red flags.
That sounds like he's got some cautious people working with him, alongside him.
Yes,
Would that be right?
Yes, that's correct. And I think most investors, including myself, will be watching the execution of the plan, because ultimately it's a plan and things can go wrong, circumstances can change. So what will be the give and take ultimately? And I think the key message I take away from this is that there's definitely been a change in the strategy. Previous governments have been much more cautious and given themselves much more room for maneuver. In this instance, we have less wriggle room, and if there are any surprises, whether it's US-China or relations with the US, Trump and AMLO, oil prices, there's less room for maneuver. In the short term, it does leave concerns, particularly if you recall that Fitch has put Mexico on negative watch. Its BBB rating is on negative watch, and they're unlikely to do anything after seeing this budget.
So the jury's out at the moment. But in terms of the rest of Latin America, in terms of investing in emerging markets, are you more or less enamored with Mexico at the moment?
I would say my fundamental view has not changed. It remains cautious because of the reasons I mentioned. There's less room for maneuver, even though prices have come down and the market's trading below its long-term historical average. I think that is deservedly so. We need to see more consistent policy from the government to be reassured. One market that we're looking to and that we like is Chile. It's a smaller market, but there in December 2017 we had a very competent new government elected, Piñera, who's been in power in the past. That country's gone from left to right, and there are potential reforms on the way, fiscal reform, pension reform. We still don't know for sure if it will be passed because the new government does not have majority in Congress. But Chile, after a few years of relatively lackluster growth, this year surprised very positively. Once Piñera was elected, investment came back, consumer consumption came back, and growth rates are expected to remain relatively high, above 3%.
Yeah. Martha Reyes, thank you very much.
Thank you, John.